What's up, guys? So today I wanted to talk about a little bit of speculation versus interpretation in trading. So basically, what I'm trying to get at is every single time that you draw something on your chart, whether it's this gray box or Light Crypto actually has a really good take on this. He actually mentions how you can kind of just turn price action off and really just start to draw random lines wherever the hell that you see fit, right? You can draw them however you want, and we'll even go like somewhere horizontal. And when we turn price action back on, our brain is actually going to look for these tests, right? So we can say like, oh, this red line that Mercury just drew is pure alpha because look, we tested it and then tested it again and then tested it again and tested it as resistance here and support there and support there. And look, oh my God, that red line is pure alpha, right? You can look at this red line and say something similar. Could look at that one and say something similar. We can look at that horizontal one and say something similar. So it's pure speculation, right? We literally drew those lines without even looking at price action. And yet, when we turn them back on, our brain just kind of is programmed to look for those tests. So it's difficult to say how speculative we're being. And that applies to my form of trading as well. And I'm not going to sit here and tell you that these gray boxes are not me speculating, right? It's not physically backed up by statistical data. And some of it actually is. So look at that gray spike, or not gray spike. Look at that spike, right? And this is just a fixed range volume profile, is just kind of giving us, where is the most volume traded at what price. So when we look at that spike right there, we can say, oh, look, it perfectly agrees with Mercury's gray box that he just drew. We don't have a gray box drawn here, although usually I would. But another spike, right? So that is interpretive data. That is statistical data. If you go look at your fixed range volume profile and you draw it from relatively the same zone that I started from, you're going to see the exact same thing that I'm seeing. So we have speculation, which is anything that you draw on the chart, and then we have interpretation. So if every single thing that is statistics, right? Volume data, or let's say even just market structure, right? Whatever it may be, if it's a statistical thing, a moving average, RSI, whatever, how is it that we look at it and make arguments about it? Why does the market even exist in the first place? How is it not that we all just go look at volume data and interpret it the exact same way every single time and then view it, in that direction? Otherwise, right, if that were the case, if I saw this as a rabbit and you also saw it as a rabbit, and every person looking at this saw it as a rabbit, and nobody saw it as a duck, we would only see the rabbit case and there would be no argument. So there would be no bids for our asks. There would be no asks for our bids, right? The market would not exist. So, how is it that interpretive data, meaning market structure, moving averages, volume, right? Whatever, the same exact statistics that I'm seeing that you also see, and yet we might come to a different conclusion, right? This one kind of says, hey, there's no peace until they renounce their rabbit god, even though, and they accept our duck god. It's literally the exact same picture. So it's why the market exists. And what I'm trying to get at is, for me, it was kind of necessary for me to fall in between both of these, right? So kind of just, and you guys hear me say this all the time. I don't care if you're being speculative or if you're interpreting something in one, way. Even if you're looking at this as a rabbit, you can tell me, oh, hey, that's the ears, right? And this is the eye, and this is its mouth. Or if you're looking at it as the duck, you can say, okay, that's its eye, that's the back of its head, and this is the beak. As long as you can back up your interpretation with speculation, right? That this might be a duck or this might be a beak or maybe it's the ears. As long as you can back up your interpretation with speculation, now you've developed a system. Now you have a way of approaching things. And as long as you give yourself a way of approaching things, then over the course of time, right? Time being the factor there, over the course of time, it's not going to matter whether you see this as a duck or a rabbit, anyways, because you should get rewarded kind of the same, right? Because you're going to come to the same kind of conclusion that this is either a rabbit or a duck. So, what I kind of want to, uh, get to the point of is I've developed a system, right, for myself. And the way that I do this is I use things like market structure along with moving averages, right? So, both of those variables are statistics, meaning it's up to me as to how I'm going to interpret that data. Is this a reclaim of our 200 daily moving averages, or is it a retest? And I would label it as a retest, and I would back up that speculation with further whatever further variables, right? And if I'm suddenly wrong and this ends up being a breakout, right, and we reclaim that zone, then I should be able to justify why I was wrong and use these arbitrary definitions like, oh, deviation, oh, fake out, oh, bear trap, bull trap, whatever, right? So you should be able to justify things and unjustify things the same way, whether you're looking at it as a rabbit or a duck or bullish or bearish, right? So what I'm kind of trying to say is I'm using a mixture of both, right? And when I look at something like this very high time frame chart, again, going back to my 4-second rule, which you don't know, if you don't know what that means, it's just within 4 seconds you should tell me what we're doing on that chart per that time frame for any chart that you look at, whether it's uptrending, downtrending, sideways within a range, or consolidating. Within 4 seconds you should be able to tell me which one of those four things, right? So 1 second per, are we actually doing? When you look at this weekly time frame, right, and you look at the price action from the past 7 months, or hey, even if you want to look at the monthly time frame and you want to look at the price action from the past year or so, what is the analysis? Which way are we heading? We're heading to the bottom right corner, right? It takes you all of 4 seconds to realize that. Here's the issue, though, is that if we're going to come in and make an analysis based off of, hey, we're heading to the bottom right corner, and I'm using interpretive data to portray that idea, right? I'm not speculating. The chart itself is physically slanted to this bottom right corner. If I'm using that as the base case for my analysis, whether we test this random gray box or a previous random gray box or a moving average or this moving average, right, the 200 weekly EMA, regardless of that, then uh, does the overall trend change? Meaning, are we still heading to the bottom right corner on the weekly? Yeah, absolutely. Right. The problem becomes you can continue making this exact same argument. And if you're the interpreter, right, with four O's, if you're the interpreter, then you can continue making this argument of we're slanted to the bottom right corner on the weekly from 60% higher than current price, right? Because thereafter, because we're using market structure as our interpreting or our interpretive data, right? We're using that interpretation to say, hey, we're heading to the bottom right corner, and we're interpreting that via the market structure, which is interpretive information because I see the exact same market structure that you do, right? Whether you see it as an uptrend here or a lower low before a lower high before a lower low. Regardless, right? Rabbit or a duck. I'm using that, and the problem becomes I can still make that argument for 60% higher than current price. Is that actionable? Is that useful at all whatsoever to me, right? Basically, the question I should ask, are you okay with sitting on your hands and waiting 60% higher than current price to then say, oh, by the way, Bitcoin's bullish, right? It's shitty analysis. It's complete fucking shit, right? Let's be honest with ourselves. So, what we need to do is we need to mix speculation into our interpretation and then assume things. So, let's assume that, hey, if we manage to reclaim something like our 200 daily moving averages, which have acted as a pretty nice pivot point for price action, that was a lot of P's. If we, if we use something like our 200 daily moving averages, then we can then kind of speculate as to whether we're likely to continue trending downwards on the weekly or not, right? Meaning, as long as we're still below these 200 dailies, then we could very well come up into these 200 dailies, find our lower high on the weekly, and then still continue our lower low, downtrend that we've had for the past 7 months now, right? And therefore, if we reclaim our 200 daily moving averages, now I have given myself this assumption of, okay, well, we're probably not going to continue that weekly downtrend. And I have saved myself 20% of sitting idly on my hands, right? So we have drastically decreased the amount of white space that we're just going to sit there and be complacent and not really make too many moves before our weekly trend shifts via our interpretation of the price action, right? Via market structure. So we speculated, and we also tied in interpretation along with that. And we can scale this down even further. And this starts to become very relevant to current price for Bitcoin, right? So if we're portraying the downtrend on the weekly via the daily 200 moving averages, then it might make sense that we're going to portray the daily downtrend using the 4 hour 200 moving averages. So let's kind of bring this back into context really quick. As of the past 6 or 7 months, right? So basically since November of 2021, we've only been downtrending across literally every single time frame, pretty much, right? As of the past month or two, right? So let's say April 6th ish, because that's when we deviated back inside the range. Every single time frame goes bearish thereafter, right? Somewhere like the next week after that. And every single time frame goes bearish. So at that point, our daily trend agrees with the trend that our weekly was already telling us. Our weekly was already saying you are heading to the bottom right corner. As of April 6th is when we actually started to make this analysis. At most, April 12th ish, right? Is when I would hope, start to make that analysis. As of that period, our daily starts to agree. Has our daily disagreed with our weekly since then? Meaning, have we uptrended on our daily chart? No, right? So we use the daily 200 moving averages to portray the past 6 or 7 months long trend that we said for the weekly. And we're using the 4 hour 200s to portray the past 2 month long trend for the daily. So when we smack our face on these 200 or these 4 hour 200 moving averages, and then reject off of them, and the same exact kind of snowball of strength melting back into a snowflake. If nobody understands what I mean, then I'll kind of add a link to the video over here. But if that higher time frame trend takes priority and we continue to see the downtrend that has been a downtrend for the past 2 months that is now fully in agreement with our downtrend as of the past 7 months, continue downtrending, then don't be surprised, right? But that also means that we can then scale assumptions to the daily to then get a jump on price action. And we're using things like market structure along with, say moving averages to kind of speculate if we're going to see a bigger relief bounce or not anyways. So what that would mean would be if we manage to reclaim these 4 hour 200 moving averages, we would kind of assume that we're probably not going to find any sort of lower high in our daily or, continue downtrending or whatever, right? And that allows for a push upwards into our next higher time frame trend. So we have now scaled our assumptions down even further by saying, hey, rather than wait for your weekly uptrend on a higher high, higher than this high, you could also use the 200 daily moving averages, which are over here. But of course, to even come up and test the 200 daily moving averages over here, you would have to reclaim these 4 hour 200 moving averages first. Since they've been respected nicely as a trend for the past 2 months, you would assume that if you do manage to reclaim those moving averages, you have now opened up the gate of opportunity for that 20% move to test your 200 daily moving averages, your weekly trend in the first place. And again, you can scale this mindset down even further. It's copy and paste, it's the exact same quote unquote winner's mindset. Yes, it is my dogma. You cannot shake me out of it, but it works, right? So when we go to something like our 2 hour 200s to portray the most locally relevant trend, right? And we can see that they even got respected within this sideways range. So when you break out and reclaim these 2 hour 200s, you would think that that now allows for a test of your higher time frame daily trend. So consider we're now using the 2 hour 200s to portray the 4 hour trend, right? Meaning every single trend is bearish at this point from your 4 hour daily and weekly. And when you're downtrending within those intraday timeframes as well, from literally your weekly, your daily, your 4 hour, hourly, 30-minute, 15-minute, 5 minute are all downtrending. That is true for all of this price action as well, right? On these little pushes upwards to test your 4 hour trend or your 2 hour 200s to portray that 4 hour trend, you are now uptrending via the 5 minute, the 15-minute, the 30-minute, maybe the hourly, right? But really, those pushes aren't all too significant because if you're going to assume a full-fledged snowman off of every single tiny little snowball that forms, right? So a reclaim of say like 15-minute 200s or whatever it may be, and you all of a sudden assume that that is going to lead to a full-fledged macro reversal of your your 4 hour trend as well, and then your daily and then your weekly, and you're just going to go back into a bull market. You are a loser here on that push upwards, you're a loser on that push upwards, you're a loser on that push upwards, you're a loser at that push upwards, right? And all of a sudden you are now a guard dog that barks at the wind. Whereas if you just simply take things at face value for what they are and say, oh, that's the first reclaim of our 2 hour 200s in the past 2 months or so. And maybe this kind of fluked you out as well, right? And again, you would kind of just say, oh, that's the deviation, that's the fake out, that's the bull trap, or whatever, right? So that's how I'm kind of scaling my assumptions. So as of right now, Bitcoin price action, I already talked about this a little bit, but since we're falling back inside the range and we're kind of threatening to not hold these 2 hour 200s, I would kind of assume that this was, in fact, the best that we're going to get. That was probably the macro top for the daily downtrend, which is also the weekly downtrend, which is also us losing the lower time frame strength and melting our snowball back into the same exact snowflake that we had for the past 2 months. So it's unfortunate. That's the way that I'm kind of viewing things as of right now. I was bull posting down here. I notoriously sold the exact fucking bottom. I'm not going to bullshit anybody. Technically, I should have sold the bottom, assuming that this was going to be the expansion break of the range downwards. If you can recall, then this was us decorrelating on Bitcoin. SPY was going up, or SPX, sorry, stocks were going up. Bitcoin is going down. It was very odd. We started to break down below the range. I cut the remainder of my spot buys. Technically, I should have woken up the next morning and bought back on the assumption that that was, in fact, a deviation below the range and traded that back up into mid range highs. And then once we create this price action, I simply expand off of the exact same bullish mindset that I should have had. And I did have, but I didn't press the buttons, right? I didn't press the green buttons. So did I actually have it? I don't know. Right. But I'll tell you that I had it. Maybe it's just me coping, but I didn't actually press the green button. So maybe I am just really coping. Right. But when we break out of above our 2 month long downtrend again, I very much just kind of assume that we're going to fill in the white space into our next highest trend, our daily trend, which we're portraying via the 4 hour 200 moving averages, right? We're looking at the 4 hour chart to portray that trend. So I hope this kind of makes sense of how I break stuff down in my head. I think about it as like a domino effect. You knock over one domino and kind of see how long it continues going, and maybe it knocks over the next one and the next one and the next one. And that snowball analogy, that very kiddish analogy. Every snowman starts as a very tiny snowball, but you don't want to assume that every tiny snowball is going to eventually make its way into a snowman, right? So as of right now, this looks to be a deviation that looks to be the macro top. Why? Because we tested the daily downtrend that we knew was a daily downtrend. It is also downtrending on the weekly, and we're now melting our snowball of strength. The same thing that makes you bullish over here, right? Should make you bullish, even though we're still testing those range highs. You would think that, hey, reclaiming a 2 month long trend probably going to take priority over this 2 week long range, right? So that's kind of my outlook on Bitcoin right now. That's how I traded things. I'm not here to bullshit anybody. I really don't give a shit about clout or anything like that. I'm totally transparent, and except for how much I trade with, which is peanuts. As far as you know, I trade with $2, and I still live in my mom's basement, and I can't afford avocado toast right now because this is what the chart looks like. So if you want to trade with my Bybit referral link, that's very much appreciated. If you want to donate to me, totally not necessary, but a ton of you guys are very kind. I very much appreciate that as well. And as always, the YouTube influencer bullshit. Make sure you like, comment, subscribe, and share with your friends and your grandma. And I will see you guys later. Take it easy.